Hi, everyone. Welcome to your latest, The Glass Half Full. Sonu, there's a lot of, well, let's just be blunt, bad stuff that's happening out there, but this is The Glass Half Full. We're going to try to find some positive. And one positive, you are working on your tan with Mickey Mouse right now. Is that still true?
That is true. I'm in sunny Orlando, and I am 2 out of 6 parks so far. 2 out of 6 days. I'm on. Today will be day 3, but today we're taking a bit of a break, going to really work on that tan at a water park. So there you have it.
Wow.
Try to
Okay.
knock some things off before I head to the water park right now. But obviously, there's a lot to talk about, right, Ryan?
You been working on your abs before you get there? Or
That
no?
too. That too. I'm always working on my abs.
There we
Yeah,
go.
with food though.
So let's just take a high level approach. We understand the headlines. We understand the volatility. I mean, the volatility we're seeing in the bond market and yields. Obviously, the oil market's just going wild. We hear everyone that there's a lot of concern out there. So no, I'll kind of start this and I'll turn it to you. You know, when you look at the average year since 1980, stocks pull back 14% peak to trough. Since 1980, the stock market's also averaged about 11% a year. So we pulled back about 7 or 8% approximately. Listen, it could absolutely get worse. Last year, we saw a near bear market. But what also happened? We came back because the economy avoided a recession after the tariffs. One more from me, Sonu, than you. Go back to 1928. Only 8 times has the S&P 500 finished the year down double digits. You're talking 1973, 74, oil embargo, massive recession, 3 years after the tech bubble, 2008. Bottom line, you're down double digits usually if there's a reason. The economy slows down and there's a reason. So, Sony, that's the big question. Is the economy going to slow down? Is there going to be a reason this year for stocks to be down double digits when all is said and done?
Usually stocks are down to your point, double digits when there's a recession. And
Mm-hmm.
then if you think back from that, how do we get into a recession? I have been in the camp that the labor market, yes, it's weaker than it has been, say maybe 2, 3 years ago, but it's not really too weak. Look, the unemployment rate is at 4.4%. That is historically low. The, prime age, 25 to 54-year-olds employment population ratio, that is higher than at any point between 2001 and 2019. Higher
Yep.
than so which means more people in their prime working years are now working than they were relative to the population than they were during the last 2 expansion cycles. So I have been in the camp that the labor market is weaker than it was a couple of years ago, but it's not too weak. That means we are not on a steady grind or path to a recession. Now, what could push us into a recession? I think this is where the Federal Reserve comes in. And you mentioned 1973, 74, or even 81, 82. What happened there? Inflation went up a lot. And then the Federal Reserve, to get control of inflation, decided to push the economy into a recession, not directly, implicitly, by raising interest rates. And I think that is the path to a recession right now. But that does not mean we are on a glide path to it, because I don't think the Federal Reserve is in a camp to increase interest rates. Let's say right now it's about 3.5 to 3.75. That's where the policy rate is. Yes, right. Tomorrow, if you tell me, right now, if you tell me the Fed is going to take it to 6%, I'd say, okay, yeah, we're going into a recession. But that's not on the cards right now, right? So I think that's what keeps me away from calling for a recession right now. And if you're not calling for a recession, the profit outlook still looks good.
Well said there. And let's not forget, we've had 3 really good years in a row on the S&P 500. Sonu, just this week, we had the 6-year, I guess we'll call it anniversary of the COVID lows, March 23rd, 2020. S&P's up more than that. S&P's up almost 200% since then. So those are some things to think about. Lots of bad stuff has happened. By no means are we minimizing what's happened in the Middle East, the fallout, potentially a more hawkish, quote unquote, Fed, more obviously higher oil prices, all that stuff. But again, the market's a forward-looking mechanism. There's a lot of negativity. I could talk all day on this. I'll make it quick. We look at various sentiment polls. You look at ETF flows. You look at equity flows. There's a lot of fear out there, and rightfully so, right? I mean, rightfully so. But as a glass half full type of investors out there, longer-term investors, we can get any good news. Our CEO, Burt White, has said it like this. It's not about good or bad. It's about better or worse. So if we get a little bit better news out there with all the really bad stuff that's priced in, stock market might like that. So no, we're probably near the end. One more from you, then one more from me. What else you want to talk about in our latest video here?
Look, along that same theme, which you just mentioned, these things are usual. You get a 10% pullback, and we're not close to that yet, right? The market's down maybe 4 or 5%, something like that. The market's holding up well. We haven't gotten close to a 10% pullback, but that would be normal for a year, right? In fact, it would be kind of abnormal not to get it, because like you said, to Bert's point, our CEO's point, volatility is the toll you pay to invest. If it was easy, that would be, we wouldn't be getting the type of returns we've historically gotten. And to that point, over the last 6 years, since the end of 2019, the S&P 500's up more than 120, 130%.
Yeah.
We've had 2 bear markets during that time. The market withstood that. We had a near bear market last year, a third one almost, right? We've had any number of 10% and 5% pullbacks, right? Meanwhile, what should the focus be on? Profits have risen. They're going on a line chart. If you look at it on paper or on a screen, it's gone up and to the right. If profits are going up and to the right, the market should also go up and to the right.
Well said. I was going to actually finish it like that as well. We call these the dual tailwinds to a bull market. New highs in profit expectations on the S&P 500 and new highs on profit margins on S&P 500 companies for almost going on 3 years now. We've called those the dual tailwinds to a bull market. Higher profits and higher profit margins can make up for a lot of other sins that are out there. And for investors, we are fully aware of all the volatility, the headline risk, just the uncertainty, and honestly, the uneasiness of everything that's been happening, so far this year, to be honest. But at the same time, for longer-term investors, we're going to get through this, just like we've gotten through every other major crisis since 1896, when the Dow Jones Industrial Average started trading a long, long time ago, around 40, and it hit 50,000 not that long ago. So let's just remain calm, remain on the course, and keep watching the glass half full every single week. And Sonu, one more time, let's let you sign off. Are you going to ride some slides at the park today, or what are you going to do exactly at Disney today?
Some water slides are on the menu today. Speaking of, speaking of working on the abs and things like that. But I'm sure there'll be quite a lot of food as well. I mean, so I will say this. I think by the time I get home on Sunday, I will be very happy to start work on Monday. And not to mention have some home cooked food.
And not to mention getting through TSA lines. If you're traveling, hello, listeners out there,
ouch.
good luck.
Don't say
next
that.
Week, Sonu will be laying on his stomach because he's probably going to hurt his back today at the park. I hope that's not true, but us old guys, we do what thing we heard about. I sneezed the other day and kind of hurt my back, so it happens. It happens. Listen,
you're getting old, buddy.
Yeah, here you go. Listen, everybody, thank you so much for watching the latest Glass Half Full. How bad is it going to get? Maybe a little more trouble, but we're still pretty optimistic. It's going to be a pretty good year for investors and the economy when all is said and done. See everybody next week. Thank you.